In this video, we're going to do a deep dive into the stock market and look at where things could be heading. We're going to clear away some confusion on what possible paths price could take from now. And please notice the US S&P Global Manufacturing PMI Index came in stronger than previously thought. This will be important to understand. The consensus was 46.2, the actual was 49. This is a very good thing. Crypto is currently in a fear-based mode, around that 50 mark. We'll look into catalysts that are driving this. We'll also look at some opportunities, and there are plenty of them. In fact, one thing that I'll share a little bit later on is something that could change your outlook on crypto completely. Looking inside the crypto market, it looks pretty red now, but after this video, you'll find that it's quite explainable. Let's run the numbers. In the last trading session, we saw the VIX spike up just a bit. Oil is on fire. Yields are basically deciding if they're going to come up or go down, but the DXY did increase. This put negative pressure and momentum on both Bitcoin and also gold. We can see that risk on sentiment is still looking good. Junk bonds have not decayed. We'll look more deeply into the Nasdaq and the S&P 500 and see where the real smart money support and resistances are. In the past 24 hours, we've seen Bitcoin really come down. Now, what is causing this? I'll get into that a little bit later. We can see no alt can escape Bitcoin's gravity. We saw a broad-based decrease in ETH. XRP came down, BNB came down, ADA came down, Solana really came down. Solana is very sensitive. It's a sensitive little thing to Bitcoin's price momentum. Please keep that in mind. Solana tends to over-accentuate downward plays in Bitcoin's gravity, but it can be pretty fierce to the upside. We also saw Tron coming down. Now, why did Doge rally? There were very definite reasons for this. I'll cover them off a little later. This is a relativity perspective. We need to look at gravity. We can see when we look at Bitcoin's gravitational field, Ethereum is currently stronger, XRP stronger, BNB and ADA and Solana stronger, as well as Tron. We can see Doge is just weakening a little bit. There's some incredibly important news about Doge that you must know. Looking at the EDX exchange, we can see Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. When Gary Gensler from the SEC attacked Coinbase, he said that a number of things that Coinbase was trading were all securities. You can see those here. With the XRP win, things changed around. The XRP case is so incredibly important to crypto, and there's some developments on the XRP case that I'll cover off a little later in the video. With XRP's win, we must keep an eye on the Coinbase Rockets 13. Filecoin is currently out in front, followed by, of course, XRP, Solana, Flow, Voyager or VGX, Matic, ADA, San, then Bitcoin. Underneath Bitcoin, Axie, Dash, Nexo, Chiliz, Near, and leading up the bottom of the pack, ICP. You can see the relativities here, but the interesting thing, Voyager is doing quite well at the moment. Professional traders and investors know that they're not trading and investing for themselves. They're trading and investing the sentiment of markets. They're thinking about what other people are thinking about. You can see currently the stock market sentiment is quite good. Crypto sentiment is good. Of course, there was a bit of a retrace, but it's still in an uptrend, and quite a nice uptrend as well. Bond and debt sentiment are also positive, but let's look a little bit more deeply. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. If we look at the Fed balance sheet, we're seeing that the Fed balance sheet has been decreasing. Currently, 87% of the S&P 500 are trading above their 50-day moving average. The market right now is very strong. Just like the C19 recovery, we're seeing a similar recovery. The top 10 generally lead the market out of problems, and we've seen that. Now the bottom 490 of the S&P 500 is catching up. This is actually a really good sign. It's Q2 earnings season. You can expect some volatility upcoming, but 87 companies have reported. 78% of those companies have beaten estimates by an average of 6.2%. All in all, sentiment is looking quite good. That doesn't preclude us or doesn't stop a pullback, because pullbacks are the way that momentum works. Price is always going up, then down, up, then down, up, then down. This is what we understand. Price is always moving in a wave. A few things to keep in mind. We're in earnings week, and companies with a combined $27 trillion value are to report the results, and we can see those yields are increasing at the moment. The Chinese stock market raised on stimulus hopes. The German composite PMI dropped to 48.3, where economists were expecting 49.8. We're seeing a lot of positive signs in the economic system, and probably the best one is the fact that the economic strategists and the financial strategists have put the price targets particularly low. Now, why do I talk about this? When the price targets are high, it's generally yielding into a bit of a sell-off, and when they're lower, it's generally yielding into a bit of a recovery. So this is actually really positive news for us. Some potential things that are weighing in on the crypto sector: the bipartisan bill to regulate DeFi. It's been introduced but not yet published. That's the KYC and AML regulations for DeFi. In its current format, this particular bill is unworkable, and it could be causing uncertainty inside the crypto industry. In other news, the Treasury Department is hard at work again to destabilize crypto, raising concerns over USDT being used by ISIS and other terrorist networks. Researchers have disclosed that one wallet linked to these terrorist groups received about 2 million USDT in 2022. In Pakistan, an ISIS affiliate did volume of approximately $40,000 in the second half of 2022. This raises the question, how big is Tether? Tether has a market capitalization of nearly $84 billion. That's not million, that's billion. And the volume that Tether transacted over the past 24 hours is nearly $25 billion. That's $25,000 million. And those researchers have pointed to a $2 million wallet over the span of a year. It's quite inconsequential. But people don't unfortunately run the numbers like this, so some people may think, oh no, Tether's in trouble. If you've managed to watch the series Narcos on Netflix, you'll see that a lot of US dollars are used to launder illicit drug money. They use cash. Of course, crypto wasn't invented back then when Pablo Escobar was doing his thing, but the concept is, even now, money laundering is done inside US dollars. That's the predominant source. This is the real Pablo Escobar, and all those shelves are filled with US dollars. Now that we have a little bit more context, Tether, a multi-billion dollar market cap, and 2 million in volume is just ludicrous. It's just ridiculous. But to the average person, this seems important, but it's not if you scale it up. The XRP ruling was terrific news. In a little while, I'm going to talk about exogenous events, and they're very, very important to understand. If you understand them, A lot of haze inside financial markets will clear up, and I have some very important news throughout the latter parts of this video. But the SEC's loss triggered an absolute crypto rally, especially in XRP. Unfortunately, a lot of people thought that the SEC would just give up. Court cases are not like that. There was always going to be an appeal by the SEC. And news of an SEC appeal against the XRP ruling is coming through now. It's quite possible that a lot of people have thought, oh no, the SEC is now going to win, and that could be causing a bit of this negativity inside crypto. Please let me know your thoughts in the comments. That is, the combined DeFi bill, which is unmanageable, and the attack on XRP's verdict. Do you think this is driving some negativity inside the crypto market? This specific chart, gold versus Bitcoin, will help you to understand what's happening to Bitcoin and the entire crypto market at the current time. You can see the gold line, which is gold, and the blue line, which is Bitcoin. They were for a time moving very closely in correlation, directional correlation with each other. Always remember the rule, the charts speak the truth. You'll find that a lot of people have opinions. They'll say, no, gold is inverse to Bitcoin. They don't move together. But the chart tells you the truth. Always look to the charts. Fundamental analysis is a very good thing when it comes to understanding future price momentum. Where is price represented? Of course, in the charts. So fundamental analysis is about forward price projection. What about current price? That is the domain and the realm of technical analysis. Nearly 19 years ago, I wrote the book Intangible Finance Standards, Advances in Fundamental Analysis and Technical Analysis for Elsevier Science or Academic Press in the US. I understand technical analysis and fundamental analysis very well. The concept is we get, from a statistical point of view, alignment and then disalignment in different charts. For example, we can see Bitcoin and gold just aligning here. Sometimes they invert on each other. Sometimes they're in progression with each other, what I call directional correlation. That particular event that just disenfranchised Bitcoin from gold's trajectory was the SEC win by Ripple. It's called an exogenous event, and they're critical to understand. Exogenous events are determined from the outside. They're an external push on an internal. In economic modeling, it's an impact that comes from outside that particular system. This is compared with endogenous events, which are internal events, where things basically return to normal. Exogenous events are the things that push charts out of alignment or synchronization with each other. When Ripple XRP won the court case against the SEC, it was a major victory for the entire crypto industry. And it pushed gold and Bitcoin out of alignment, directional correlation with each other. The one thing to understand, an exogenous event can cause a shock like this, but still the underpinning issues remain. There are things that affect gold and there are things that affect Bitcoin as well. This is the thing to note. Underpinning relationships after exogenous events still hold true, but their impact is mitigated. But it doesn't mean their impact is removed. Now, what am I talking about? Because you really need to understand this. In less than 2 days, the FOMC will have its meeting to increase the federal funds rate. You can think of the FFR as just the base interest rate inside the US economic system. There's currently a 98.3% probability of a 25 basis point increase. And we can see a 1.7% probability of a 50 basis point increase. This is pushing the US 10-year yield up. When yields go up, things like gold and Bitcoin come down. It's also pushing the US 2-year yield up as well. What is the 10-year? It's a proxy for mortgage rates. What is the 2-year? It's a proxy for savings rates, that is, bank deposit rates. Why are they important? Because if you look at your mortgage rate or what you can get from a bank, you're looking at the US 10-year and the US 2-year with some bonus banking profit interest thrown on top. What do increasing yields do? They make that particular country more attractive for foreign direct investment, and also foreign traders to shift their money from where they are to chase the higher yield. What do we see as a result of that? We see the currency of that particular country coming up or appreciating in value. Why is that? Because it becomes more desirable. This is why it's really important to track the DXY, the US dollar currency index, and let's have a look where the smart money are buying and selling. What we can see, the DXY did a big push up to smart money resistance at that 101.263 level, and then at that 101.392 level. These smart money levels are very, very important to understand, and you can get them through the indicator. What actually occurred here when the DXY just went up? It rocketed up to the moon, but it didn't really. It rocketed up to a smart money sell level. These are like ceilings. When there is enough momentum, it can crash through the ceiling up to the next one. But eventually it will get knocked out and therefore knocked down. What are we seeing? The DXY is slowly grinding higher. It's underneath this smart money resistance level at the moment, and it's currently 101.381. Therefore, it's the appreciation in the DXY, just supported by the appreciation in the US 2-year and the US 10-year yields, brought on by the potential of a higher federal funds rate, which is probably now priced into the market. But these things are so critically important to know. For example, most people, if they look at a particular thing, just say they're looking at silver, they might not even consider the US 2-year, the US 10-year, and the DXY. They may not know where the major indices are going and their support or resistance. And crypto is the most risk-sensitive asset class in the world, and tracking total and Bitcoin is incredibly important. These Tier 1 charts are the way the global financial markets operate, and that is across every single country. If you know the Tier 1s, you know how to understand directional correlation, and it does take some time. And you do have to rely on the truth the chart is telling you. One thing we know, that overall sentiment is looking quite positive. Where could crypto be going today? And when we look at the S&P 500 futures and we look at total crypto market cap and Bitcoin, we can see there's a directional association there. This is not at all by surprise. Another incredibly important chart to keep your eyes on are junk bonds. When junk bonds decrease inside the market, that generally puts negative momentum on Bitcoin and stocks, and especially the stock indexes. Therefore, we need to know where smart money is buying and selling. How do we know this? We just turn on the indicator, which is the embodiment of Level 1 and Level 2 standard certification. And what do we see here? Around this 92.24 mark, junk bonds has quite substantial support. This is very important to understand. If there was a fresh air gap below junk bonds with no smart money support or particularly weak smart money support, that would be a problem. But the fact that junk bonds has relatively strong support and it's not far away, we could see the major indexes just going for it. And this will flow through to crypto as well. This is why it's so critical to look across your Tier 1 charts as an absolute minimum. I would suggest Tier 1, Tier 2, and Tier 3. To get synchronized in with the market, looking across these charts is the best thing that you could possibly do for your profitability. When we look at gold, what are the smart money buy and sell levels on gold at the moment? We can see we've got this 1966 smart money sell area, and it's tapped that a couple of times. What we do notice, we've got smart money buy area down at that 1940 mark. This is a bit of a fresh air gap. What we could see, if the yields spike, the US 2-year, the US 10-year, the DXY, they all spike, that could lead gold down to that 1940 level. I need to give you a better appreciation of the news as well. When looking at silver, the smart money buy and sell levels, and if you want this indicator, just pop across to ctksmethod.org. What do we see? The smart money has been selling from about 24 up here, 24.42, and around that 24.40 mark. That's quite substantial. And we've got a bit of a fresh air gap, which means that silver can fill that gap quite quickly, down to the 24.11 mark. Unfortunately, a lot of people approach financial markets in the opposite way than they should. Think about when you're planning a beautiful holiday. Do you just hop on any particular plane and not pack anything and just go somewhere randomly? Probably not. Probably what you do is what most people do. Spend so much time planning your itinerary out. In all likelihood, you have something like this. You know exactly where you're going. You know where you're staying. You've done your budget. You know your travel times. You know so many things. Contrast that to how most people go into financial markets. It's like, put it all on red. Don't run the numbers. Don't do the research. Let's go, all on 35. What typically happens when people gamble, they typically lose everything plus more. Professionals are very, very different. They run the numbers. They know what they're looking for. Instead, we must be very skilled trackers of price momentum and price movement, of endogenous events and exogenous events and directional correlation. We need to be more scientific on how we look at interdependencies. And that all starts by knowing your Tier 1 charts and how they're moving. Fortunately, I do videos on all of these charts, all 27, inside the service. And for those members inside the service, please revisit those particular videos. You'll see around this time we were expecting this kind of downplay. Enhancing your tracking skills, you should first look at total. That is, after you've looked at all the data we've just looked at. And to find where smart money is buying and selling, just pop on your indicator. You can see that we lost support around this 1.153 trillion. We had a fresh air gap below. That gap got filled. This is critically important to understand. A lot of times people think when price comes down like this, it will continue on forever. It doesn't. This is exactly why I created the CTKS method, to help people to know where the safety nets are inside market structure. What happened when we met this safety net? This is a strong ceiling. That is a strong safety net. We can see that we bounce. We're currently in upward progression as well. Often you will see a retest of a higher ceiling. Just keep that one in mind. If you don't know where smart money is buying and selling, it's effectively gambling because you don't know the objective dynamic market structure of the chart that you're looking at, and you don't know how all those charts play together. It's really important. Let's have a look. Where is the smart money buying and selling on Bitcoin? We can see the variety of different levels. I'll just overlay those for you with SC so it's easier to see. What we can see, it's very, very similar to what happened with total crypto market cap. It blew through resistance or blew through support and turned it to resistance and then came down and found support. We see that we had a little bit of a cracking of the concrete when it came to Bitcoin, but it's managed to hold. And so far, we need to get above this 29,253 level to resume a retest of the 29,500 level. This is really what we want to see inside the crypto market. If we don't manage to get above 29,250 and we can't maintain this 29,100 zone, The next level of smart money support is down around 28,700. This is precisely why we need to understand the sentiment that's inside markets, and so far the sentiment is quite positive. One thing that we see, even though the crypto market came down, Doge did quite well. But unfortunately, Doge encountered some smart money resistance around that 764 to 769 mark. That resistance unfortunately was not passed in the past trading session. We can see, relative to the crypto market, Doge is doing incredibly well. Why is that? It's an exogenous event. What is that event? Elon Musk put the Dogecoin logo next to the X. Why is that important? It's possible that Elon's movements with Tesla could give some indication. Tesla removes Bitcoin but keeps Doge as a payment option. In 1999, Elon Musk created PayPal, but it was first called X.com. What did Linda, the CEO of Twitter, have to say about X? X is the future state of unlimited interactivity, centered in audio-video messaging. Now we get to the good part. Payments and banking. Creating a global marketplace for ideas, goods, services, and opportunities. Remember where Elon came from. X.com was PayPal. What was PayPal? PayPal is an electronic money platform. What does that mean? You can pay with your credit card and you can buy things with PayPal. PayPal acts as an intermediary. Elon is deeply into payment methods. What happened with Elon Musk and PayPal? In September 2000, Peter Thiel replaced Elon Musk after the board ousted Musk. That means they fired him. Elon's $44 billion play for Twitter has much more coming with it. Just like Steve from Apple, Elon Musk wants his X.com to reign supreme. Does Elon have the financial resources to back this dream? Yes, he does. He's currently the wealthiest person in the world and has an estimated fortune of in excess of $236 billion US. From the real-time billionaires list, Elon is the richest person in the world. But Louis Vuitton founder is closing in. Our job as professionals is to read behind the news headlines. When we see Elon Musk rebrands Twitter to X, we know what this means. This is a resurgence and an inverse takeover of PayPal. A lot of people could look at this and just say, Elon's doing a name change. There's so much more to it. Elon doesn't do anything by half measure, and we can feel that Elon's gearing up for something incredible. Returning to Doge, you can see that Dogecoin has defied Bitcoin's gravity to an extent. If Bitcoin were pumping now, I would suggest that we could see 100% plus appreciation in Doge's value. Of course, always have your three-dimensional risk management playing out at all times. It's very important for Doge to get above this 764 to 769 resistance level. There's a lot of resistance up there at the current time. Even with so much fantastic news, it didn't stop smart money structure from playing out inside Doge. And this is what you're going to see time and time again. This is why it's so vitally important to be able to know where smart money is buying and selling. Price is always moving in a wave, and when we get retracements, that means that we're on the right side of the percentage. Professionals look at that and say, about time. But the survival instinct is very different. Survival instinct kicks in and says, wow, I'm going to run away from this. You know that you've reached that professional status when you don't run, you actually lean in. But you do so scientifically and sensibly. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.